Now, last year was challenging for the mergers and acquisitions market with a confluence of factors resulting in lower deals. This included heightened global political tension and elevated interest rates, which were not conducive to deal-making. However, mergers and acquisitions activity in South Africa is expected to recover, and bankers believe that sectors such as mining, energy and resources will see the highest degree of deals. For more on this, SABC Markets presenter Nastassia Arendse reports.
In terms of M&A and from an M&A perspective, 2023 was quite a muted year relative to what we've seen previously. We believe that was primarily driven by the geopolitical tension and the fact that with the elevated inflation, you saw interest rates remaining higher for longer. And why that's important in the context of mergers and acquisitions is that with high interest rates, money is more expensive. So it just makes it more expensive and a little more difficult to consummate deals.
Okay, so let's now get into your expectations for 2024. I mean, you expect the M&A activity space to stage a recovery. Talk to me about the factors you believe will be the driver of that recovery.
It's twofold. Firstly, it's the macroeconomic factors that I've spoken to. So primarily, it's going to be the decrease in interest rates that will drive it from a macro perspective. But secondly, there's this drive towards this energy transition, which we're all very excited about. That's driven a lot of transactions in the metals of the future, as we put them. And these are metals that essentially will power the energy transition. These are metals like lithium, copper, and the like. So it's basically the energy transition that'll drive M&A activity as well as an improved macroeconomic landscape.
In your notes, you mentioned that there is a pressing need for SA corporates to diversify their earnings base outside of South Africa, and you believe that that will be another driver of M&A. Are there specific other sectors that could be, part of this diversification outside of the sectors that you mentioned right now, the likes of mining, energy, etc.?
Absolutely. So the sector of fast-moving consumer goods, FMCG in short, is where we believe we'll see a lot of deal activity, specifically driven by the need for companies to diversify out of South Africa. The reason being that the South African consumer, relative to the rest of the continent, for example, and other BRICS nations, is under a bit more pressure. The GDP rate isn't as attractive as places like Nigeria, Ethiopia, etc. So most businesses, specifically in the FMCG space, are being forced to look outside of South Africa for growth. And we've had the opportunity as ABSA, being a Pan-African bank, to actually see a lot of these deals in the consumer space.
When we look at specific economies, you talk about, the BRICS plus economies when it comes to the growth prospects. And when it relates to G7, you highlight the issue of hard currency earnings. But I want to talk about some of the attractive growth markets that you talk about, India and China being specifically. Let's talk China. I mean, there's quite a lot that has been said about China's recovery following the COVID-19 sort of lockdowns. What are you seeing when it comes to China's economy that makes you believe that perhaps we need to give it another look and not write it off?
The reality is that China is fast emerging as a driver of growth economic growth globally. And I think to write it off would be a big mistake. What is going to drive growth coming out of China is essentially growth in the infrastructure sector. So a lot of our minerals on the African continent, the off-takers are Chinese companies because it feeds into their steel-making businesses and the infrastructure sectors there. But besides the infrastructure business, you've got this huge population that needs food and that needs services, and they're not necessarily self-sufficient. So just from, the basics like population and also their policies that enable growth, we believe China is still an economy that's going to drive global economic growth going forward.
When it comes to issues that I suppose you deal with in the M&A space, whether it's how do you finance that particular deal or whether regulators will sign off on that particular deal, which of the two do you think is going to be the most important this year?
In terms of what we look at when we finance transactions?
In terms of the deals that are unfolding, do you think it's going to be the issue of how you finance that particular deal, or it's going to be the issue of whether regulators come on board to sign off on a particular transaction or acquisition?
So what we found is that the market generally is not short of money to finance good transactions. The challenge becomes the money actually finding a home. And what drives that is certainty. It's certainty around policy, it's certainty around energy supply, it's certainty around just being able to get your product out of the country if you're an exporter. So definitely in terms of what is the most important thing, funding is almost a secondary issue. What investors are looking for is certainty around regulation, policy, and then issues around energy supply and logistics.